here we are in the last hour. I ended up by accident. I bought those contracts right up here today. And we had 2620 entry. We just sold our 3 contracts. We are the last print at 31.90. I couldn't get out of the way. What I am telling you right now, they are breaking in that new chairwoman. Dow's down 163. There was one hell of a fat finger, what we call a small mini capitulation in the actual high frequency model. And that it happened. Everything got whacked. And when I say I'm going to sell these 10 contracts, 10 volume, that's me at 906. Say hubba hubba. But I'm out to sell these at 1050, but I'd rather think not. And what I am going to do is cancel that sell. And what am I going to do? I'm going to do what I am mandated to do. And I'm mandated to get the most profit out of any one of these. And I'm going to put that sell out right now at 11.8. Here it is right now. That order at 11.8. We are the only volume, and we're going that way. And there it is. And we got, oh yes, we are getting a mini capitulation. Just like we were looking for, just the opposite of Mr. Benny Boy. Yeah, and when I say stay out of the way, stay out of the way, because this one right here, and I already said this morning, what's going to end up happening is that we're going to gap open up tomorrow morning. Because what are they doing? They're breaking her ass in. Yes, I said the big fat cat Wall Streeters are busting her in as the very first day. And you can see it here. You can see it live, and the shorts are working. And yes, we are going to put those out there. And another thing that we're going to do is we know that these are 36.70. I want everyone to know that we had already sold these before. And where did we sell them before? Right around $48. And then going into what she's got to say, and the markets are not taking kindly to what's going on here. And you know what? Everybody else likes to talk about something. We're doing it live. And I regret, but here's what I'm going to do. I'm going to be very proactive as a master in this goddamn S&P. I'm going to let you see the colors, and I'm going to let you see these ECNs in here, because here's what we're going to do. We're going to do the following. We are going to come back to 35, and we are going to come back, and we're willing to pay a premium. Remember, we are that last print, and here's that premium. We are going to flip a pancake, and we're going to go to 7.6, and that is Houdini at work. And basically, we are going to come back down. That was a big committee capitulation, and we talked about if it did it this morning, that we would look for a gap open up. So as we go into the close, we're going to find a stock that got way down there in the brain, and I'm going to put this order out right here at 27.6. And I'm very happy to say that, yes, we needed to ring the cash register, but now they're at 34, 35, 36. We got those points across there. There is going to be a pop off of the bottom. We are going to pop off of the bottom. This is what's happening. It's live. So we're going to go buy up the most beaten down stock, and we're going to go long, because tomorrow morning we are going to have a gap open up. And you heard what I said, everybody. This is the MMT Master Market Maker platform. It tells us right where we need to be. Now, in these FOMC meetings, we were just down 205 handles in the Dow. We're coming back off of that hook right here. Going to test that 1840 on the S&P is a very crucial point of reference for support. Once we do break it, we don't know if that's today. We could carry less. But once we break 1840 on the S&P, then the next level is going to be somewhere right around 1805 to 1810. And we are going to get what we call a fat cat cover the short, extreme volatility in the FOMC meeting. Today, it's 12:14 p.m. That fat cat seller hit big. Right now, the date 3/19, the time 12:15 p.m. Pacific Standard Time. We have bounced. That is what we call a negative delta range. You buy off of those bottoms and you get ready and get your fat cat sandwich because you'll be eating good. Here we go with that S&P. We got Janet Yellen talking it up. You want to see in that 60-minute bar, this is where that big drop happened. Yes, we were up here at a short-term wall of resistance when the broader volatility of the S&P 500, which got that support level. Yes, we were talking about this level over here. And one thing about fat cats is the following. If you really want to know what a fat cat is, well, a fat cat's like this. You come off of that low and you can see right where that breach was, right there. That is what a fat cat. And not only that, we hit that 60-minute sell signal, we are going to go lower. But I will tell you that the price volatility is here to stay for the whole rest of the year. And just remember, you go to stockmarketfunding.com and you go out, when there was Ben Bernanke was in charge, we had the opposite effect. This time, it's going to bounce off of the bottom. They're breaking her in with some volatility. She made a statement that was not very favorable, obviously. And once again, we are very happy to see volatility return. We got 25 minutes to the close. We bounced 100 points on the Dow. That is the way to trade FOMC minutes and meetings with people. Conference call is going on right now. Treasury yields were going higher. Stocks are coming off their bottoms. As I said, we are buying to sell on the opening bell, on the opening gap. And remember, this isn't after the fact. You're looking at it right here, right now. We got exactly 24 minutes to the closing bell. We bounced 100 points on the Dow. S&P is regaining a little bit of traction, back up to 1860, down 11.41 handles. And it's how do I want to learn how to trade volatility? How do you know how to trade an FOMC meeting, especially one that's going to change your life for the next 4 years? And I didn't stutter either. And I really mean that. Monetary policy, print money, all of it is that lady is going to be in charge of the FOMC now. And the market broke her in by popping that down and 205 handles, and it's live. And there was, my friends, a fat finger. And what's a fat finger? Well, sell the futures, stocks go down. And that's how it's done, fuckers. Here we are right now. We're settling out that Dow. We had one heck of a movement on the Dow FOMC meeting. You can see where the Dow got right here. It got right down here on that wick. So we had rallied up, rolled over on that FOMC on the DJ, down 113. Now, for the S&P, we're going to conclude this meeting, and we're going to conclude it with the fact that it too had its volatility off of Janet Yellen's first meeting acting as Fed chair lady there. Now, as far as NASDAQ composite and everything else goes, we're going to conclude that. We were down 205 points. We came down. So the volatility round trip on the Dow was about 300 points in total for the whole day. And not only that, that S&P, it too was bipolar up toward its 23 handles off of the all-time high, 52-week high, was 1883 here. And this is what went on. And so therefore, we will keep everyone stay tuned. But I'm going to tell everyone, a lot of volatility is going to stay here. And not only that, you're going to have to learn one thing, that markets have a lot of risk moving forward, particularly when we start getting into 2015 and 16. Corporate profits are going to be at a certain level That's a knee-jerk reaction. Stay tuned.